Hello, good morning everyone. This is Cynthia Yanez from JD Rio, and I'm going to be here with you to go through this webinar regarding CFDI on payments made and method of payments. This webinar has been created for you due to all the recent publications that the authority has been made in regards tax invoices, which are most commonly known as XML or as its name in Spanish, CFDI. CFDI, from now on, I'm going to clarify that I will refer to CFDI as XML, which is, after all, the document that serves as tax invoice and that will help us demonstrate the validity of transactions. I'm going to be here with you for about an hour and an hour 15 to go through this topic. We are going to have a question section at the end, so I know that you are available to type any questions that you want through the course of this webinar, but we will be answering them at the end. So if you send a question, please be patient. We will be looking at them towards the end, and if your question is not answered during this webinar, you'll find our email at the end of this presentation, so you can feel free to send me an email and I'll be glad to answer your question. Otherwise, you can contact your account manager, so I'm sure they will be able to answer the questions as well. So now, as we just mentioned, the main purpose of this webinar is two specific rules that have been published on the miscellaneous regulations. One is Rule 2.7.132, which provides couple of regulation in regard the method of payment, and it also includes an option to include a description that indicates NA, which stands for non-applicable. We are going to review this rule, its entrance in force, and everything that it implies. We are also going to review Rule 2.7.1.35, which provides new obligation in regards when payments are made toward a specific invoice. We're going to see that we have additional procedures that we have to do, so we will be reviewing this, and as mentioned, we'll have our question segment in the end. Now, before I go into subject, I want to give you a little bit of feedback as to why these two regulations are important. You'll see that in the past, and I'm talking before 2010, Mexican tax authorities used to be very paper-based. That means that all the records should be kept in paper, which we still need to have them, but that was the only way to demonstrate the transactions, paper-based. And all the invoice for the transactions that you had with your customers and with your suppliers, they need to be supported by a pre-printed invoice in paper as well. Now, with the globalization and also with the idea of expediting reviews and making everything paperless and more easy for the taxpayers to comply with, in 2010, tax authorities released electronic invoicing. At first, it was mandatory for a group of taxpayers, and then in 2012, it was mandatory for all of the taxpayers that carry out transactions. So since 2010, we are seeing this trend to go everything in electronic. So in 2010, we have electronic invoicing, which is the XML file that we currently know, and is also the CFDI that we are going to be talking about through this webinar. Then, as part of updating its functions, tax authorities in 2015, they released the obligation of electronic accounting. This means that yes, you still need to have your own records and you need to print it for support at your facilities, but I want you, the tax authorities, to send me on a monthly basis your electronic accounting, which we have also spoken about in the past. This electronic accounting consists of chart of accounts, trial balance, and journal entries. So this means that the authority is having every record of every transactions in electronic. So by us sending this information on a monthly basis, along with all the invoices or XMLs that they already have, because they are electronic, they are available for almost every information that they could need in order to make a review or an audit to the taxpayers. So now, to finalize our feedback, in 2016, they add additional requirements to XML, which is what we're going to discuss. And the main reason of this is, for one, the globalization. Of course, there are studies that analyze which country causes the most administrative burden to its taxpayers. So of course, Mexico will want to escalate a few levels so as not to cause much complication in having taxpayers to comply. That's for one. But the other is, they don't want their auditors to go out of their offices. They want to use the least resources in order to be able to perform an audit. So that's why they have been requesting all this information in electronic. So at their own offices, they're able to make automated audits and come with a pre-calculation of possible tax credits. So that's basically one of the reasons of going through all this motion of having everything filed to the authorities. But in the end, it also provides simplification and saves time for taxpayers by handling everything at electronic. So now we are going to start with the subject. We're going to start first with Rule 2.7.132, that, as we just saw, it's for method of payment. So first of all, we have to review what is the method of payment. So here we have to look at one of the documents that establishes this requirement, and you will see here that form of payment comes from Exhibit 20. This Exhibit 20 was very famous back in 2010 because it's the one that establishes all the requirements for electronic invoicing. Now, all this webinar, it's going to be regarding invoices, meaning XMLs, and meaning CFDIs. So I know the feedback was related to electronic accounting, but please keep in mind that all this webinar is for tax invoices, XMLs, or CFDIs. So this Exhibit 20 gives us a requirement to include form of payment. So what is this form of payment according to the Exhibit 20? It's the manner by which the transaction will be performed, and that is in a single payment or in several installments. This is important because tax authorities will want to control if transaction was paid in a single payment or in installments, because it controls the VAT and also controls the revenues that are going to be taxable to the individual taxpayers. Now, the same Exhibit 20 recognizes a second requirement, which is method of payment. And by method of payment, according to the Exhibit 20, we can understand that it's the, let's say, vehicle by which the transactions was paid, such as cash, check, wire transfer. It could also be credit card, etc. So also I want you to understand that these two requirements for Exhibit 20 come from our miscellaneous regulation. So this is not in the federal tax code or its regulation. It is on miscellaneous rules that are published every year. However, Exhibit 20 is the document that supports electronic invoicing, so we should be looking at this. However, as I mentioned, there is the main code or law that all taxpayers should look at, which is, of course, our federal tax code. This federal tax code is the one that gives taxpayers the obligation to issue tax invoices. We can see Article 29A that tax invoices should contain the following requirements, and there are a couple of sections, and in specific we're going to look at section 7. It says that it should include the total amount stated in number or letter according with another couple of requirements. So in letter C, it says that we need to indicate the manner in which the payment was made. So it refers to as cash, electronic wire transfer funds, checks, debit, credit, or service cards, etc. So we need to see that the tax code has like a different description for what form of payment is made. We see that form of payment by the tax code is cash, wire, check, etc. However, if we look at Exhibit 20, cash, check, transfer, etc. goes to as method of payment. So this is a difference that at the beginning everyone was making questions, but it has been clear that what is requested in the XML will be the method of payment, such as cash, check, transfer, even though on the tax code it is established as form of payment. Just thought it was important to make this clarification. Now we are actually going to start seeing the rule, which is 2.7.132. This rule it's separated in parts. It's not very long, but each paragraph provides with important information and requirements, so that's why we have separated in a few screens. So this rule allows us to put a legend NA or not applicable on the invoice, as well as any other similar description for the following items. We also in the past gave you the updates that it was necessary to include the tax regime for the taxpayers, such as general regime, or if you are taxable under any special regime, it was necessary to indicate it on the invoice. Now, with this rule, we're able to include non-applicable or NA. Also, in the past, it was necessary to indicate their domicile or branch office at which the CFDI or XML was issued. So with this rule, we're also able to not include that information and just include NA. Also, the third benefit for this rule is that as for form or method of payment for which the payment was made, such as cash, check, transfer, credit card, etc., we can also use NA. So if you look at this part of the rule, it seems like this rule is a benefit or a simplification alternative for taxpayers. Certainly, for item 1 and 2, tax regime and domicile or branch office, it definitely is a simplification rule. However, we are going to see that for item 3, form or method of payment, while it is a simplification alternative, we're going to see a couple of exceptions and a couple of guidelines that need to be considered. So to continue with this rule, it states that it's also valid to indicate how the CFDI or invoice will be paid in accordance with the information available at the moment that the tax invoice is carried out. So, in the prior screen, we learned that we can use NA for method of payment, and in this one, we see that we can also use the information available when we are issuing the invoice. However, this implies a couple of things. For example, the fact that if you know that your customer always pays with a wire transfer, you could be in the position to include on the XML the description wire transfer, because it's the information that you have available at the moment of preparing the invoice. However, there is the inconvenience that if at the end your customer does not make a wire transfer, and for this one occasion they use a check. So there seems to be enough elements to say that you do not need to correct the first XML. But here we are going to face other troubles, such as internal criteria with our customers and suppliers, which we all have on a day-to-day basis. So they may ask, even though using the information available at the time, it's possible that they have their internal criteria to always use the exact method of payment. So it's possible that they could request us to go back and change the XML to have it match with the actual method of payment. So we are learning from here that maybe it's easier to use the option of including NA, not applicable, in order to avoid further needs to modification of an XML. I think this will help us avoid being requested to having to re-invoice another XML. Now we are going to continue with the exceptions of this rule. And in here, it's not possible to use the expression NA, not applicable, in the following cases. 1. If the payment was made prior to the issuance of the CFDI, we can no longer use NA. We will have to use the exact method of payment. And then the second restriction will be if at the moment of creating the invoice you are receiving the payment, you cannot use NA. The reason is because in both of these cases you will already know which is the method of payment. Therefore, you will be obligated to indicate the exact method of payments. Now, in order to summarize, this rule has already given us a benefit of including NA in tax regime, NA for domicile or branch, and the possibility to use NA for method of payment. It also gives us the possibility to use the information available for method of payment when we prepare the invoice, and it has given us two cases in which we cannot use NA, and that is when the transaction has been paid and then the invoice is issued, and when the payment is made and at the same time the invoice is issued. And the logic of this is because the taxpayer will already know the exact method of payment. Now, I want to talk about when this regulation is applicable. This rule was published through the second miscellaneous rules published on May 6, 2016. However, on June 3, 2016, the tax authority released a publication through its website saying that including the method of payment will be applicable until July 15. And the reason that it will be applicable until July 15 is because this rule obligated taxpayers who fall under the two exceptions. It will obligate those taxpayers to include the exact method of payment according to a catalog that will be released by the authorities. So this catalog that you can see right now was released on the tax authority's website on June 3rd. And along with the catalog, there was the obligation to start using it as of July 15. So I want to stress the importance that it was published through its website, because now we are having to look to several documents in order to be able to have an accurate compliance just to invoice and XML. First, we need to go to the Federal Tax Code for the obligation. Then we need to go to the Miscellaneous Rules Exhibit 20 in order to pick up the requirements for the XML. And now on their website, as a release, they're informing us of this 10 code catalog that will be used starting July 15. So it's what gets all taxpayers having to look through many documents and creates a little bit of uncertainty. However, we have been dealing and reaching out to authorities in order to determine the best way to comply. So, what is the payment method catalog? It is a list that, as mentioned, was published on the website, and it indicates the code. I want to stress code for each payment type. So these codes that you can see on the right must be used, as we have just discussed, when the payment is made first and then the CFDI is issued, or the CFDI is issued at the moment that the payment is being received. So those are the two exceptions in which we cannot use NA. So otherwise, we will need to use one of these codes. For example, we have O1 for cash, O2 for nominative check, O3 for electronic transfer of funds, etc. You will see at the bottom that there is the code 99 for other. This other code is for a type of payment that is not included on this list. For example, there can be an offset of accounts payable and accounts receivable. So we do not see offset in any of these codes. So we will have to use code 99 other. Or, for example, if the payment was made in specie, this means that you receive a good. For this payment, we will have to use code 99. So please, please understand that this code 99 is not like a wild card that you cannot identify something. Okay, I will use 99. No, code 99 is specifically for method of payment that is not included in any other code. Now, another item of controversy is the fact that electronic accounting, which is Exhibit 24, provides a different catalog for method of payments. So I know this is something that is out there and some taxpayers are having doubts as to which exhibit they should use. So we want to clarify that Exhibit 24, which is the one that we are looking at, is specifically for journal entries. It also has been published by the tax authorities, but it's specifically for journal entries. So I know at the beginning it's pretty much the same codes, but this catalog is definitely wider. So we should not be confused in using Exhibit 20. Now, in this part, I also want to note at the bottom that there is code 98. This catalog for electronic accounting for journal entries does include an NA code. However, in the Exhibit 20 for electronic invoicing, there is not a code for NA, as we just saw in the prior screen. So in that case that we need to use NA, please don't use code 99. The authorities will not understand that using code 98 is for NA in regards with an electronic invoicing. If we want to use NA, we have to stick with using the expression NA, not applicable, or something similar to that. So this is something that taxpayers have been confused. So please always look at Exhibit 20 when making a tax invoice. Now here we have a chart that can give us some guidance as to how we can use either the expression NA or the catalog for method of payment. First, we have to understand if the transaction is carried out in a single payment. So, okay, if the payment was done before the invoice, we have to use the catalog for method of payment. We cannot use NA because it's one of the exceptions. Then, if it is a single payment and the payment occurs at the same time that the invoice is created, again, we have to use the catalog for method of payment because it's the second exception. Then, if it is a single payment, but the payment occurs after the invoice is generated, we have the option to indicate NA or not applicable without using any code. So in this simplification manner, please note that it's just for description, and that will be NA or something very similar to that. Now, if the payment is done through installments, we have the option to indicate NA for the first invoice that will be for the total amount. We don't know how each installment is going to be paid, so we have the option to indicate NA or something similar to that. And For all subsequent payments, of course, we will need to generate CFDIs. So each time we receive a payment or an installment, we are going to have to go through this process. Okay, do I already know the exact method of payment? If yes, we have to use the catalog. If not, we have the option of using NA. So I know that in theory, this can be very clear, but bring it to real life and we are going to have a couple of complications. It's very likely that some of the transactions can be paid in several forms, such as, for example, part of an invoice can be paid by wire transfer and the remaining part is going to be paid by check. So in this case, we need to select the applicable codes starting with the payment for the largest amount and so on until reaching the final of the method of payment for the smallest amount paid, separated with a comma. And that's correct. If, let me say an example, the client pays 10,000 purchase with 3 methods of payment. 7,000 is paid with credit card, 2,000 is paid with cash, and 1,000 is paid with food coupons. In this case, one will assume, okay, maybe I'll just indicate credit for the 7,000 that was paid, and that's it. No, the authorities are requesting that the method of payment will be as follows: 04 for credit, comma, 01 for cash, comma, 01 for food coupons. So this is actually how we need to include on the CFDI or XML the method of payments. We need to break down how the total payment was received in order to indicate the correct method of payment. In this part is also optional to include a description because on the catalog we saw code and description. So if the taxpayer's choice, they can include 04 credit card, comma, 01 cash, comma, 08 food coupons. But another complication may be that there is not enough space to include all that information. Here I want to make clear that the description is optional. What the authorities will read is the code, that being 04, 01, and 08. Now, the catalog, the 10-code catalog that we just saw, does not provide the term NA. Is it possible to use code 99 as similar to NA? The answer is no. One might think that, okay, it's the most logical choice, but actually there's no code for NA. So every time that we want to use the benefit to use NA, we need to include the description. And the description very well may be NA or not applicable, but without a code, because there is not a code for non-applicable. As we also just discussed, code 99 is used when the invoice is paid in a form not shown on the list, such as offset, such as pay with goods, and something else that is not on the list, but it's clearly identified as a method of payment. Also, I want to let you know that this field for method of payment is an editable field, so it will allow you to include either the code or the code with a description or just the description in case that you want to use NA. Now, due to all these questions that the taxpayers are coming to, the tax authorities have published on its website, again, a couple of frequently asked questions, and they really solved what it seems logical questions, but it's when you bring it to real life that you're going to have trouble with. So I'm going to show you a couple of the frequently asked questions to give us some clarity about this matter. So one of the questions is, does the use of the method of payment list or catalog apply to all type of receipts, CFDI for revenues, expenditure, transfer, and withholdings? The answer is that it only is applicable when the CFDI is for revenue or for expenditure. So, as you know, there are 4 types of CFDIs, the ones mentioned before: revenues, expenditure, transfer, and withholdings. However, the requirement to include method of payment will only be applicable for revenue and expenditure. So that means everything that we issue to our clients and everything that we receive from our suppliers. Now here is important to make another note that we know that there is a specific complement for all payroll payments. So it's also known that this payroll CFDI, it corresponds to an expense. So we will be obligated to include the code for method of payment in each of the payroll receipts as well. So I know that's additional burden. So if the CFDI is issued after the payroll payment, you will be obligated to include the code for the payment depending on what it was. If the CFDI is issued before payment, we can always use the benefit of including NA because we don't know how the payment is going to be made. Another frequent question is, in which cases Code 8 for food coupons it's to be used, and when should we use Code 05 electronic wallet? Here the authorities are making a difference that Code 8 should be used in the case of food coupons, and Code 05 shall be used when the food allowance benefit is granted through an electronic card. So, if we look back to the catalog, we will see that Code 05 is electronic wallet and Code 08 is food coupons. So right now the authority is telling that Code 8 shall be used in case of paper food coupons. So this is something that can be tricky as well, because when making a payroll receipt, companies usually give the benefit of food coupons to employees. So you have to be very careful, because food coupons, if they are delivered to the employees in paper, they are non-deductible. So we will want to avoid using Code 8, because Code 8 is for food coupons paid in paper. So if we express method of payment 08, the authorities will immediately know that it's a non-deductible item and may claim that in a further review. So, for consideration, when you are making a CFDI payroll receipt and you are giving food coupons to your employees through an electronic card, we should use Code 05 for electronic wallet. Another question, when does the method of payment catalog apply? Well, we have been mentioning this before, and it can be applied in 3 cases. 1, if the transactions are made through an automatic teller or mobile phones, we can use the catalog and we have to use the code because we already know the exact method of payment. 2, when the payment is made in a single payment and it's made prior to the issuance of the invoice, or is the CFDI is issued at the moment that the payment is being received, we have to use the catalog and we have to use the code because we already know the exact payment method. 3. When the payment information is known upon the issuance of the CFDI. Here is also one of the options of this rule that we can include the information available at the time of creating the invoice. But here we need to be very specific that if you are using information available and not the actual information, we only have to use a description. We cannot use code. Another question, what code shall be indicated on the invoice issued for transactions carried out with the general public? Okay, we know that general public, companies that have transactions with general public, they're not obligated to issue one XML per transaction. They have the option of maybe creating one invoice for the transactions of the entire month or one on a weekly basis as they decide. So in theory, according to what we have seen, they will have to break down how the total of the payments was received and then start from higher to lower, as we just saw in an example before. However, through this question on their website, the authority are allowing this type of companies to use the code 99 others to be recorded instead of all the other exact method of payments. So this definitely is a benefit for this type of companies, but it's important to make a note that this is not according to the rule and is not according to the catalog, but the authorities have allowed this as a benefit through this website. But I don't think we're going to have a lot of people that fall into this scenario. Now, as a summary, and this is also provided by the authorities, it says that are CFDI valid where the field for method of payment shows the number code and the description, or is it necessary to register both? So here we have 3 examples that will be correct according to the tax authorities. 1. We can use the code catalog for method of payment and include the description. As we mentioned, we will have to use O3. That will be the obligation, but also, if decided, we can include electronic transfer of funds. That will be optional. But here we comply with the requirement because we're using the code. 2. Only use the catalog code for method of payment, O3. This is the simplest form to comply because we're using O3, which is the code, and that's all that is required. So just by including O3 or whatever code is used, we will be able to comply. 3. Only the description for CFDIs issued on My Accounts. Now, My Accounts is only applicable for individual taxpayers, small individual taxpayers. So I know this part won't be applicable to most of you as well. These type of taxpayers, they are only obligated to include descriptions, which is electronic transfer of funds. But in any other case, we have to use the code. Now, so far, we have seen the first of the rules, which is the possibility of using NA, the possibility of using the information available at the time of creating the invoice, and it was about two exceptions in which we cannot use NA, and we will be obligated to use the code catalog with the exact method of payment that was used. So now I want to move forward to the second item of this webinar, which is Rule 2.7.135. This is another rule that will establish new obligation, and I'll explain it in a few moments. Part of this we already do on a regular basis, but some of these rules are new and they will cause additional burden, and you will see why. First of all, I want to say that this rule comes in the third miscellaneous rules. This was published on July 14, 2016. However, these rules comes with a new attachment or complement to the CFDI that it's going to be called, it's the complement for payments made. So this complement so far hasn't been published by the authorities. They say that right now they are reviewing with the providers for CFDIs, and they are in the further weeks they should publish this new complement. So at this moment this regulation is not in force. It will be enforced 30 days after the new complement is published. However, it's important to start reviewing this rule because it will definitely be additional administrative burden. So this rule says that when a transaction is not settled in one payment, an invoice will be prepared for the total value of the transaction. That is something that we already do. And afterwards, an invoice will be issued for each of the installments made. So when we have a payment in installments, we always do one invoice for the total of the amount, and right now we already do another invoice for each of the installments. So far we already do these transactions. And the reason why it is important for the authorities to differentiate the payments done through installments is because, as I mentioned before, it serves to control the VAT flow, and it also controls the revenues for the individual taxpayers. Now, the second part of this screen, it's a new obligation, and it says, when an invoice is issued for each of the payments, a statement must indicate 0 pesos in the total amount of the transaction as method of payments with the expression payment. So this part means that the authority will generate the new complement for payments made, and in this complement we are going to indicate that the total amount is 0 because we already have an invoice with the total of the amount, and to identify that it is a payment of an installment, the method of payment it's going to be the expression payment. Rather than having to use a code, we are going to use this expression. This another screen is another new obligation. It says, in addition to that, when a transaction is performed where it indicates single payment, but the transaction is not paid, but after the issuance of the CFDI, the payment complement shall be used. What does it mean? It means that I create my CFDI today and my customer is going to pay me tomorrow or is going to pay me 10 days from now. When I receive the payment, I need to do a second CFDI with a complement to recognize the payment for that arrived later than the CFDI. So this is definitely something new. As I mentioned, for installments, we are already accustomed to having to prepare several invoices, but for an invoice that is paid in one installment, now we are having the obligation to generate a second invoice with a complement when the payment is received. So this definitely creates additional burden. So in other words, it says another invoice must be issued for the payment made, even though the payment is not in installments. This means that for any sale on credit, as short or long that the credit may be, a CFDI must be issued for the payment made on a later date. Now, another issue to consider is that when there is a CFDI with a complement for payment, that where it shows that the transaction has been paid partially or in full, the CFDI for the total of the transaction amount cannot be canceled. And if you want to make any modifications, a new credit note must be generated. Why the authorities are including this impossibility to cancel a CFDI is because in recent months, there have been taxpayers incurring into bad practices, that they are canceling CFDIs from 2014 for 2015 that have already been paid. We have had cases in which we received notification that the invoice that we had as good and as deductible has been canceled by the supplier. So, by including this paragraph, the authorities are, they want to avoid having this type of bad practices. So it means, okay, if you have an invoice that has been paid, either full or in partial, you are not allowed to cancel that invoice. Therefore, it gives security to the taxpayer that paid that invoice that it will continue to be valid. So they're kind of putting a lock to canceling invoices that have already been paid. However, a problem with this is that credit notes are a deduction rather than a cancellation of invoicing. So a possible consequence of this is that for a tax installment, the taxpayer will have to consider the total of the invoice that was made at the beginning and not being able to deduct for tax installment the credit notes. We will have to wait until the annual tax return to deduct such credit notes. The second part of this screen says that the CFDI with the complement for payments can be canceled if it's going to be replaced by another with correct information. However, they are also putting a lock, and this cannot be done later than the last day of the fiscal year that the CFDI was issued. So here we are going to have to review at the end of the year that all of the complements for payments are done correctly. Otherwise, if we move to the following year, we cannot go back and correct those complements. What can be the risk? Well, the risk is that the complement for payments in the case of installments controls the VAT flow. So if you are a taxpayer that requests VAT refunds, you may be in a trouble because the CFDI complement for payment is one of the main requirements for crediting the VAT. So as mentioned, with this new rule 2.7.1.35 comes the new obligation of preparing each time that you receive a payment, a complement for payment. That is an XML with the complement. However, as mentioned, this complement has not been released yet. It is likely that the authorities release it in the following weeks. So we have no idea what this complement is going to look like. However, by the wording of the rule, we can foresee that it might look something like this. For example, at the top, at the left, we have tax regime. Okay, according to the prior rule, we can use NA. Method of payment. Here we have to use the word payment, even though it's not in the code catalog that we just talked about. We will have to include the expression for payment. In the case, it is a complement for installments or a complement for a payment received on a later date. So the amount, as we read on the rule, should be 0. But now, if we move to the right, we can see that at the middle it says method of payments. So here we are going to recognize that this payment is made in installments, and the lower items, it's sort of like a probably account statement in which you are going to control the total of the balance and then the balance that has already been paid. So at the end, you should be able to identify the outstanding balance for the corresponding invoicing. So in this example, we have the prior remaining balance will be 255,000. So let's assume that in this occasion, we're paying 100,000. Our outstanding balance will be 155,000. So this is sort of to have control of your accounts receivable on the CFDIs. And actually, this is one part of the reasoning that the authorities are explaining as part of informing this new obligation. They say that with this new complement, taxpayers will be able to control their AR through the CFDI. I know that if you have accounts receivable, you probably have a lot of other controls, and it's not necessary to control it through a CFDI, but is what the authorities are selling it with. So we also have some other practical assumptions in this rule. It says that we need to select the concept payment as method of payment. However, as we just saw, this concept or code is not on the codes catalog that we just saw. So according to this, it's possible that there should be a new publication with new code catalog to include this concept. Otherwise, we will have to continue to use the expression payment as it is an editable form. Another practical assumption is that if a purchase or sale on credit is executed, even if it is in one payment, should the rule that we just talked about be followed? And the answer is yes. In accordance with the rule, another invoice needs to be issued with the corresponding payment complement. So, we just reviewed. If I make an invoice to a customer today and I expect the payment tomorrow, 2 days after, 10 days, or 3 months, At the moment when I receive the payment, I will be obligated to create a second CFDI with the payment complement, even though the invoice was paid in full. So in this type of operations, I will have my original invoice or CFDI for the total of the transaction, and then whenever I receive the payment, I should create another CFDI with a payment complement. So this is a new addition to our already extensive obligations, but it's one of the main changes of this rule. So now we are going to have a quick example of payment in installments. It says, a client makes a down payment for 100,000 on September 1st. The supplier does not know at this time what merchandise or service will be rendered. It's a down payment or advance payment. On September 20, merchandise or service is requested for the amount of 200,000, and the application of the 100,000 that were paid previously is requested. Then the remaining 100,000 will be paid on October 5th. So how will the CFDI be registered? And how many CFDIs must I issue now, according to this regulation? So first, on September 1 or September 1st, we are going to have a CFDI to recognize the advance payment for 100,000 pesos. So we are going to, if we are in the case that we already know how the payment occurred, we're going to use the code, for example, 01 for cash, 03 for transfer, etc. So that is to recognize that we received a down payment or advance payment. Then September 20, I make the sale. I already know which goods or service I rendered. So I'm going to make a normal invoice for the total of the amount. I will include the description of the service or of the goods that were sold, so that it's normal so far. And then on form of payments, I know that it's going to pay in installments. So as form of payment, I have to recognize that it will be paid in installments. And method of payment, we have to use the code for the 100,000 pesos that were applied for the advance payment. So let's say that the advance payment was paid in wire transfer and we use code 3 for the advance payment. In this case, in which we are applying the advance payment, we will have to use O3 as well. And then finally, on October 1st, 5th, I collect the remaining 100,000 from our customer. This time, I have to make a third CFDI, but this time with a complement. And so, of course, as amount, I will include 0 because it's not a sale anymore. It's just a complement for payment. So amount will be 0. But in the complement, I will have to say that it's a payment in installments and that I am receiving 100,000. So my ending balance for the original CFDI is now 0. So this is what this type of transactions will have to look like in the future. Now, what is when do these regulations enter into force? Okay, so complements published by the tax authority on its website will be mandatory 30 calendar days after the publication on such website. So, the first regulation, the option of including NA and its exceptions, was published on May 6th. However, on June 3rd, we have a release by the authorities saying that it will be applicable on July 15. So the first part of this webinar, NA and the catalog codes, it's already applicable on July 15. However, this second part, for the second rule, which includes the complement for payment, for payments received on a later date or for payments received in installments, is not applicable at the moment. And the reason is because to comply with this regulation, we need to use the complement for payment. And this complement for payment hasn't been published. It's expected to be released in the following weeks. So once it's published, we will have to wait 30 days before it enters into force. So there's still a couple of time before this second part of our webinar is applicable. So now, how does a payment in installments look like right now? Right now, we do not have to use a complement for payments. So what we do is we issue a CFDI for the total of amount of the transaction, and we indicate that the form of payment it's going to be payment in installments. And then we also prepare a CFDI for each payment made with reference to the first invoice for the total of the transaction each time we receive an installment. So this is what we currently do right now. We are accustomed to and we are familiar to. Once the complement goes into force, we will have to use this complement every time there is a payment of an installment or a payment in a later date than the issuance of the invoice. However, something that we have to start including in this example right now is we have to start using the codes for the code catalog. So, what can be the possible penalties for not complying with this is we see on the federal tax code that failure to comply with the requirements on the tax regulation regarding CFDI may generate a fine from 13,570 pesos to 77,580 pesos. So this background is on the federal tax code, and it is regarding not issuing CFDIs or not including all the requirements in the federal tax code regulation or miscellaneous rules. So definitely, I know that I mentioned all these requirements are in several documents. This fine could be applicable to all of these requirements. So definitely is something to take care of. Then that is the reason of us having this webinar to you, to inform you of everything that's new and the possible implications. We also, a few weeks ago, released a bulletin with these two new rules. But if you need more information about it, you definitely can contact us. So far, we have reached to the final part of our webinar. We are going to be answering a few questions that you have made through us. Let me see. Okay, so here we have a couple of questions. One, if I use code 3 for wire transfer, but payment was made in check, do I need to correct the first CFDI? Okay. At the beginning, we said that we can issue the CFDI with the information available at the moment. So if you know that it's a client that always pays with wire transfer, you could be in the possibility of using wire transfer, but without a code. Remember, code is when you know exactly for sure the method of payment. If you want to use the information available, you have to use only the description. For example, in this case, instead of code tree, you could have used just wire transfer. However, another part is that you can later on be requested by your customer to change the XML to use the correct method of payment. So, as mentioned, I don't think that it will cause the receipt to be non-deductible, but if you're dealing with a customer that wants you to change the XML, most likely you will have to change the XML. So if you're not sure how the payment is going to be made, we will recommend to use the option of including NA or not applicable or something very similar. So we have a couple of other questions that we have received from you. We will be answering this by email. Please feel free to send the questions to me or your account representative. I know they will be able to answer this for you, but I'm also available for you. So please feel free to contact us. As I said, we also have the bulletin that was already sent to you, so you can review it. But please let us know if you have any questions. We will be looking forward to the release of the complement, and if necessary, we will be sending you specifically emails of how it can impact each of you. So thank you very much for your time. I hope you have found this webinar useful. Thank you very much.